Afternoon traders, it's Bill Baruch with Blue Line Futures and it's your midday market minutes. Let's get to it here. CPI, and you're seeing this saying it's hot here this month, but let's remind ourselves this is just one number. And the Fed has been right all along. We've talked about it. We've talked about their jobs discussion. Jobs in March, big, huge number. Everybody got excited about it. And look what happened here for the April number. So if you look back at April's drop-off last year and the CPI numbers, it was lower again in May, but not by that type of drop-off we saw in April. So this could be a little more subdued on the year-over-year numbers for May, but the month-over-month, the core CPI number month-over-month was a big 9/10 move. This was basically 3 times larger than analysts had expected. And this alludes to, there's different sort of idiosyncratic moves in the market. Used trucks or used cars. I mean, that's a 10% increase in prices. It's pretty unheard of. But guess what? You've heard of this too, is the used cars or rental cars. There is a lack of supply there and things like that. The supply chains are distorted. Some of this stuff just takes a little time to work out. And our guess is the Fed is going to continue to be right about the economy, about jobs, about inflation being transitory through the summer. By their metrics, of course. I mean, we see lumber and we see ag prices. We see what's going on here. But by their metrics, it's going to be transitory. And this number could start to come in, if not totally by May. So we'll start to see it come in June and July. And I think a lot of, too, is you've seen this build up heading in from the first quarter where everybody's been seeing the prices through the charts and prices in their pockets, but they haven't seen it through the Fed's metrics. Here it is. The Fed's metrics have digested it. And let's see, again, I don't think this is going to be a follow-up number as strong for the next couple months. But we've seen equity markets take a big hit lower. For the S&P, 4070, 4075. That's going to be a big area, and we're testing into that right now as I'm talking. If we get down below there, we talked about we could close below 4100. Really, there's a big gap, and that has a target on its back. 4010 to 4020, that's going to be a big area there. 4039 is a big retracement as well. So a lot of support down in there. We have rare major 4-star support down there. So that's what we're looking for, and we do think the market will bounce from there. You are getting some breakdowns here, some weakness in the NASDAQ. Watch as it gets closer to those February lows, and again, this is a lot of air coming out of the tech here as rates rise. The 10-year yield's getting out above, close to 1.7. It could get out above 1.7. The dollar's starting to turn a little bit as the yields take up. The dollar has been subdued here as yields in Germany have really got going. That's something to pay attention to too, because the yields in Germany and Europe have been running. The U.S. yields have been really tame here over the last couple of weeks. So they start get going again. That gets the dollar going. That starts suppressing commodities. And another reason to think that May's digits for CPI are going to be more subdued if the dollar starts going here this month, and you still have the second half of the month to go, and that starts to subdue a lot of these prices that we see or feel. PPI is tomorrow. So keep an eye again. 4070 closing basis, but really 4100 really paves a path below down to 4010, 4020, 4039 there, a big area of support there from that March non-farm payroll gap. Now, looking at crude oil, we've been very bullish crude oil. I've been talking about it, and even though we wrote in the report today, it's very bullish out above 64.5. We've taken that off our September crude oil longs off the table here, just to kind of watch for a bit. It's right up against your June contract against major 3-star resistance, so take that into consideration. And then the metals, they're getting hit. We're welcoming weakness in the metals. The dollar strengthens. We'd love to see the metals weaker. 1800 in gold would be a great place to be a buyer. We're watching for that. Give us a call. We're here to help with anything on the board. All of these moves help you navigate. Our trade desk is here, 312-278-0500. Remember, though, futures trading involves substantial risk of loss. It is not suitable for all investors.